Good day. Markets opened higher. Oil is back above 65, Asian indices and S&P 500 futures are on the rise. Growth is not particularly convincing and the situation could change quickly.
The threats to the market are the same: growing yields on US bonds, which speaks of high inflation expectations, and fears that the Fed will curtail the printing press holiday, which has been going on for a year.
Let's not forget about Quran psychosis. We considered how beneficial it is to the elites, therefore we are waiting for the next horror stories on this topic. Aid package passed over the weekend in Congress, ahead of the Senate. Nevertheless, it was expected for a long time and the markets will not push to new highs. In the absence of new negativity, it will be enough to keep the S&P 500 between 3,800 and 3,900. Strong growth requires strong Fed action on bond yields, for example, replacing short-term bonds with long-term bonds, as was the case in 2011. We look forward to this weekend movements in oil. OPEC meeting on March 4 and the main question, will there be an increase in production? Russia is in favor of the increase, Saudi Arabia is against.
Apparently, in order for the Saudis to stand their ground more confidently, before the meeting, the United States published a report of the Special Services, which says that the Crown Prince of Saudi Arabia, Mohammed bin Salman, personally gave the go-ahead to work on journalist Khashoggi.
By the way, no one is imposing sanctions against Saudi Arabia. I can imagine what would have happened if someone in our embassy had been dismantled for parts. If production is not increased or slightly increased, oil may continue its upward movement and go above 70, which will be positive for the funds. Now the dollar index is above 90.8, a good sign for the markets will be its decline towards 90.5 and below. Today I expect the S&P 500 in the 3820-3850 range. Forex market review for March 1st. There are no definite dynamics on the markets yet. Markets are moving towards growth, but everything can change. It is worth waiting a little, but the Eurodollar is already starting to move towards the weakening of the US dollar. Where do we go next and what can we expect?
In this review, we will look at currency pairs, and also try to connect what is happening in the currency markets with the stock markets.
Currency pair EUR-USD. On Friday, everyone panicked and our currency pair went down again. This movement will be especially unnerving for those who have gone from the trend line of the channel to the long, because the expectations of the outcome of the transaction last for a long time. My recommendations remain the same: to wait for the outcome without interfering with the deal. As for the currency pair itself, I personally expect growth due to the new stimulus package, which should weaken the dollar. A weakening dollar will cause markets to rise again, but the situation is not easy. If the Fed is unable to support the raging euphoria, then the sell-off will go further, but I believe the Fed will do its best. We will publish detailed ideas on the stock market later. As for the Eurodollar, it can be used as a correlation between the mood in the stock market and the strength of the dollar. It is also worth considering working long on daily charts, but with caution. The degree of tension in the markets makes making money very difficult, as movements become more difficult to predict. Currency pair GBP-USD. Pound dollar.
We talked about the fact that prices are too high and indicated the moments of price reversals, although we warned that on the daily chart this entry is not entirely appropriate, because it goes against the trend, but here an exception could be made if we continued to observe this pair and would see it.
On the hourly chart, the figure of the technical analysis double top has emerged. On the daily chart, there was a pin bar, and on the hourly chart, we saw an additional signal for a decline.
The second peak, according to the law of the genre, was less than the first, which indicated a greater strength of this figure, because its logic is that bulls tried to push the price higher, but their strength turned out to be weaker than the bears, and this gives the bears an advantage on breaking prices down.
Memorize these moments and you may be able to apply these figures yourself with proper practice and practice.
Now there are no signals for this currency pair, but from my previous reviews, I can recommend waiting for the price to reach the lower border and then enter the long on the signal of technical analysis.
Review of commodity markets as of March 1. In this review, we will analyze the current situation in the commodity markets and try to build a competent picture of what is happening in order to understand exactly what actions we should take. Oil Brent. Let's start with oil and describe the situation with regard to it. As we can see, the price starts to follow the trend again. The price goes to the target of $70 per barrel, and against the background we will soon have an OPEC meeting, which will agree on increasing or maintaining oil production. The main parties to the dispute will be the Russian Federation and Saudi Arabia. What is important for us in this meeting is not the result itself but the forecasts for it. I will continue to monitor this asset to keep up with events, but for now we will repeat the key one.
The target for oil is movement to $70 per barrel, and until the price has reached this price level, one can speculate within the day, if there is a signal for this.
It will also need to monitor news media forecasts about what exactly the market expects at the meeting. Maintaining or increasing production. If production is maintained, then oil prices will continue to rise, but if not, then it may end. The key here is not the news itself but the expectation from it. You should be watching the market's reaction, not building theories about how the market will react. The news itself is of little importance, only the reaction from it is important. Gold. I am sure that gold is now a sore subject, and I had to analyze it more thoroughly to give a local picture of this asset. In past forecasts, we called for gold to be borrowed in the long term on a drawdown. After that, and how prices continued to fall, they expressed complaints to us, and therefore it is worth repeating everything again. When we talked about buying gold in the long term, we meant a time period from 6 months onwards. This has been said many times. Plus, these recommendations were in the direction of the inflation hedge. This recommendation still works, but it is long term. If you are interested in the local picture and you are not interested in waiting so long, then you need to have a completely different approach. At this stage, we see that nothing further keeps the price from falling. There is local resistance, but it is not strong enough to break above. In my opinion, this asset in speculative trading is worth trading from trend lines. At the moment, I do not see a situation where gold begins to grow instantly, and therefore it is not worth buying it at these prices yet. We are waiting for further price reaction to the levels and trend lines. Natural gas. For natural gas, we made a buy recommendation from the trend line. It failed, but we can reboot with a new one. I say in advance that this is normal and everyone can be wrong. How does the current situation differ from the previous one? In previous reviews, we recommended entering this asset on the hourly chart, and this signal closed for us in the red, but in terms of risk management it was an excellent deal. Now the pin bar has appeared on the daily chart and further price increases can be expected. Stop loss should be set behind the pin bar shadow, take profit is 2 or 3 times higher.